Michael Saylor is finally joining DeFi. Yes, I said that. We'll break it down for you because it's very complicated to understand this, but we've talked about this for a while. Let's get into it. I do want to thank our sponsor, and that is Tangem. This is where you guys can get into self-custody. The way that you do it is you buy the 3-card set. You get that, you always have a backup, and it is one of the best tools out there for self-custody. So check it out, use our link. You're going to get not only our discount, you get the bonus discount, which is 20% off the Black Stealth card right now. So you can get that one. And you get 10 bucks in Bitcoin. So, I mean, come on, guys. This is like almost free to get one of these. So do it now. All right, so I want to go into a clip. This is Michael Saylor at the Bitcoin conference. He's breaking down STRC, Stretch. We had the CEO of Strategy on just last week talking about this and a lot of the advancements that this particular product has made as a new financial instrument. And in reality, it's probably one of the biggest fighters against a money market. Now, Saylor goes into quite a bit of detail here. I want to show you this clip real quick and then we'll comment. Take a look.
Now, how can we tell? The instrument grew to be the largest preferred stock in the world within 8 months. Stretch is a simple thing to remember, STRC. The other stocks are C/PN or POW.PR.E. If you went and searched for these, you wouldn't find half of them. Some of them, the ones that say OTC, it's illegal for you to buy them. And so what's the result? Nobody trades them. All of the standard retail rails are supporting this. You can buy it in 10 seconds. So it's easy. And we estimate 3 million households right now are benefiting from STRC. STRC isn't just the biggest preferred, it's actually the most liquid preferred in the world in 8 months. Look who it's competing against. Wells Fargo, Bank of America, Fannie Mae, Citi, JP Morgan. It's 25x more than the next best one, and it's not a year old. It's like Superman as a toddler beating the crap out of everybody. We've just did something which is 40x bigger than the next biggest thing that's ever been tried by anybody. And again, we're not even 1 year old. To the people backstage, the timer in front of me is not working, so I may very well go on forever if you don't turn the timer back on.
The conference was interesting because a lot of the events did not have a lot of people there, but Saylor's event, look at that. That audience was absolutely packed. So this is clearly showing the demand for Stretch, and I think when we had their CEO on last week, he presented a lot of very interesting cases of how this particular product starts to change things. And the reason this is important is because this could start to move into a DeFi, and we'll talk about that here in a second, but I want to play a clip for you where Saylor takes on and says, hey, what if a bank were to get into this? Take a look.
Everybody would like a bank to pay them 3 times more than they're being paid right now. It's not even debatable. Like, which will be the first bank to offer you a digital money account or digital yield account that pays 8% on your dollars? I mean, there's not one bank in the world, but it only takes one bank to decide, why don't we just give people 8%? And every bank in the world is literally one regulatory approval away. They just got to go to their banking regulator and get the sign-off to offer a digital yield account. And you're the bank that offers 8% instead of 3%. I don't know why you wouldn't slurp up 10, 20, $50 billion. And the same is true with crypto exchanges.
This is coming, guys. We are going to see more of this. And I think the point he's getting at is this is going to attack the core center of the banking foundation, and that is the money market funds, probably the most effective. And even if you're looking at holding yield on stable coins, or you're looking at money market funds, remember the tax position on these are quite a bit different. What I would invite you to do is go back and watch the video that I did with Feng Lei, who is the CEO of Strategy, and we broke it all down. There were some very good points he made. Go back on the channel, look at that, spend the time to go really understand what they're trying to do here, and you'll get an idea of where this is going. Here's Patrick Witt. He is basically saying the ICBA is doing its members a huge disservice over this issue, because this is another factor of where, and just so you guys, this is Independent Community Bankers of America. What they did was a poll asking if people want yield. Of course, they worded it in a way that was like, yeah, of course you don't want yield, so just say no, no. The basic should be, do you want me to ban yield on your stablecoins? It's yes or no. That's an easy one. And of course, Patrick Witt hits them again saying this is the problem that we're dealing with. Instead of committing continued lobbying malpractice, the ICBA should be enthusiastically supporting the compromise that Senator Tillis and also Brooks have reached, which addresses the issues of idle yield head on. And that goes back to the point of the narratives that we have not seen, and the language we have not seen out of the Clarity Act is that it is likely that idle yield is going to be moved into something that goes into active yield. So interesting times right now, because as we look at what Stretch is doing, this is just one company, one project out there doing tokenized Stretch right now. I want to go to a clip here because this will break down a little bit where Michael Saylor says, here's where tokenized Stretch could go. Take a look.
You're seeing tokenization taking place right now. How fast? You know, the chart's out of date. So this has gone from nothing to hundreds of millions of dollars. I think we'll probably go through $1 billion of AUM over the next 4 to 8 weeks. So this is explosive industry downstream of Stretch. And we're committed to helping everybody that builds on top of STRC. Right now, I see about a dozen projects that are going on in this area. It's exploding. And you're going to see a lot of people in the DeFi ecosystem, and they're going to loop these 8% coins 5 times to get to a 30% yield or a 40% yield. And then you can modify or program the liquidity from continuous to daily to weekly to monthly to quarterly to annual. There are announcements about that are just coming out right now. There are companies that are going to do that in the crypto ecosystem. And then there'll be a bit of battle about, are you going to do this on Ethereum or Solana? Are you going to do it on the CeFi exchange or on Base? And then how many different DeFi protocols will you link it to?
Do you guys realize what he is saying right there? This essentially takes the OG of Bitcoin and marries it with the potential of tokenization. That tokenization is starting to occur both on Solana, Ethereum. You can kind of see just on X stocks alone, absolute skyrocketing. And he's point on, which is holders are going up, total asset values are going, and this is the very beginning of it because this is just starting to happen. The likelihood of this exploding into a large tokenization layer for not only MicroStrategy, this could be one of the most innovative products that we've seen on Wall Street. So a lot happening around this right now. And who else is it going to affect? Because this starts to affect others as well. And the point that I want to get into is what happens if Clarity actually goes through? Here's Saylor talking about it.
The Clarity Act will go through. We're setting up a massive supply shock. And I actually think that there's going to be a coming together of the altcoin or stablecoin industry and the crypto industry and the Bitcoin community. The Bitcoin community hasn't had a lot in common with the crypto community for the past few years, but now the interests are crossing, means that the Solana ecosystem, the Ethereum ecosystem, the DeFi ecosystem, every protocol, every digital token idea, every perpetual source of leverage, all of the DeFi exchanges, all of them are going to be engines driving demand for Bitcoin, which will drive growth into their ecosystems. I think we're entering into a virtuous cycle. It's going to be good for everybody in the digital assets industry.
Let's end on that note.
All right, so listen, guys, we've been saying this for years, that Saylor eventually would move to this strategy. And Stretch seems to be one of the vehicles that is going to help accelerate it. Speaking of coming full circle here, we got to talk about Cathie Wood. This is a breakdown in a podcast that she did that talks about Larry Fink and tokenization. Take a look.
We needed Larry Fink, actually, to change his mind because he was saying, he was the leader of the pack almost, and it was interesting that the leader of the largest asset management firm in the world was making it his business to dismiss Bitcoin. But his conversion was so extreme, and his conversion had to do with a vision and imagining the tokenization of everything, finally understanding that, wait a minute, the internet was not built with a financial layer. His conversion took place. It gave the industry permission to say, wait a minute, if I don't get on board here, I might lose out.
Well, I think she is right. I think a lot of finance and Wall Street realized quickly that the Ethereum network was the layer they were talking about in terms of the future of finance, and that is exactly right, what she's referencing there. Speaking of going full circle, we got to talk about Cathie Wood. She's talking further into the strategy that stablecoins have really implemented on the industry, and the amount of time that it's taken from the Genius Act last year to the clarity of what we're dealing with right now, of just trying to get it through, and what Circle and Tether have been able to do to create really kind of a new narrative, a network effect, so to speak. Take a look.
We thought Bitcoin was going to serve the roles that stablecoins do now. So I think that's the other big surprise and has become the glide path for DeFi. You know, is this a winner take most world, the stablecoin world? And the network effect would suggest yes. And I think the delays in the Genius Act and the Clarity Act have given Tether and Circle, USDT and USDC, really more running room to enjoy the network effect.
So if you consider what she's talking about there, the real question is, will Stretch end up taking over the kind of yields that we're dealing with, we've had on stablecoins and even money markets? And remember, all of this is now centering around Solana, ETH, Hype, even BMNR is involved in this. Take a look.
It's very interesting to watch JP Morgan in particular, especially since Jamie was, and still is in many ways, the biggest holdout when it comes to Bitcoin. But, you know, he is letting his technology team overrule him and letting client demand overrule him as JP Morgan approaches this technology. In terms of watching DeFi build out, I think the pure plays are going to be, there'll be the network effect there. You know, Ethereum, Solana, Hyperliquid, we'll see. We are placing our bets on them. We've bought some DATs for our ETFs. Bitmine immersion is one.
It's interesting she did not mention Stretch, because I think this is going to be a bigger component moving forward in these portfolios. But let's jump over to Tom Lee for a second. Tom Lee's Bitmine buys another 45,000 worth of ETH. That's 103 mil just in the past couple hours. And remember, he's trying to get to that 5% of supply, and he's got to do it right now, because as we start to see this market turn around, this is going to get harder and harder for Bitmine to get to that. So he's trying to promise this point of 5% to his stakeholders, to his shareholders, and to the strategy that Bitmine is trying to implement globally. So ETH is becoming their obvious big play there, and it's moving quickly. Speaking of DeFi, the DeFi United fund has been able to do something that is quite striking, and that is raising almost the entire amount of the hack in just a few short days. This is, to me, stunning, and in the sense that we've been able to see that. And where we are today, right now, I anticipate it's going to be able to continue the acceleration. I think this was a good statement right here. DeFi United will go down as one of the most insane stories of this new era of finance ever. Still can't believe it's almost resolved with very little user loss, which will be amazing, because when we looked at this original hack, our thought and analysis on this was it's going to be one of the biggest and possibly even a contagion event. And in fact, because of this kind of effort of the industry, it's been able to control it. Imagine if a bank had been in this position. There would be no one other than the government that would come in and maybe step in. This is the industry that's doing this. So think about that, guys. It's a big deal. Last up, I want to hit on a price prediction from Cathie Wood on Bitcoin. Listen to what she had to say.
And so we think that the Bitcoin bull market is still intact. I realize we've been through what many would call a bear market, and yet down 50% is a victory compared to down 85 or 95%.
Bear market for ants, Cathie.
Yes, exactly. Exactly. So our base case for 2030 is 730,000. Our bull case is 1.5 million. David Puel, who does our on-chain analytics, says the absolute capitulation would occur, meaning we may get there. I doubt it, the way Bitcoin and other assets are acting. But that drop-dead price range is in the 50 to 55,000 range.
First of all, fairly accelerated Bitcoin price prediction there. Now, in the past, she's kind of been pointing to 2030. I don't know if that's the date that she was still holding for her 750 plus. But if you look at it right now, imagine where Ethereum would be if we're at a minimum on the bear case, or on the base case, I should say, for 750K on a Bitcoin. Where would Ethereum be? Imagine that, and much less Solana. So all of this is interesting because eventually I think this starts to roll into Stretch as a potential investment for ARK. So kind of unique how it kind of comes full circle all the time in finance. We'll break this down soon because it's going to get very exciting, I think. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.